Hi friends, welcome to the NPTEL course Business Development from Start to Scale. In this week, which is week 8, we consider the theme of corporate development. This lecture, the 38th in the series, has the topic of a logistics startup. In the previous two lectures, we have considered the cases of a new IT startup and an FMCG startup. In this lecture, as I said, we will consider the digital logistics company, which is Delhivery. The company evolved to its state from its inception in 2011. The company was incorporated as a logistics service provider and it launched the transportation management system in 2011. In 2013, it launched the warehouse management system and commenced fulfillment business. In 2014, it launched NetPlan, the network design tool, and it launched also AdFix, Address Resolution Engine, automated sorters in network. It commenced self-managed express surface line haul network in 2015. In 2016, it commenced part truckload services, PTL service offering. The launch of Constellation, partner managed last mile delivery network, took place in 2016 again. In 2018, the company commenced truckload services, TL service offering as the company called those services. It also offered cross-border service offering. PaaS, platform as a service soft launch, was happening in Sri Lanka and Bangladesh in 2018. In 2019, Delhivery became a unicorn when it raised its biggest round of funding with a $413 million investment from SoftBank. The company entered into partnership with UPS, a globally renowned logistics player. It opened the Delhivery USA office. In 2020, the company acquired Road Piper Technologies Private Limited and launched 3 mega trucking terminals in Haryana, Maharashtra, and Karnataka. In 2020, it signed an agreement to enter into a strategic alliance with FedEx, another global logistics provider. 1 billion express parcel shipments were delivered since incorporation in the year 2021. The company converted itself into a public listed entity through its successful IPO in 2021. It deserves mention that in the Indian economic sector, a few sectors were considered very traditional and were considered not so amenable for modernization. Pharmaceutical distribution was one such vertical. However, digitization has completely transformed pharmaceutical distribution, particularly with the entry of new age digital e-pharmacies. Similarly, agroeconomics was considered beyond the reach of modernization. However, new sensor technologies and new ways of disintermediation between the farmers and the users have radically been transforming the agricultural landscape, although much work remains to be done. In the transportation sector, which was dominated by single truck operators, it was considered that the contours of the industry cannot be ever changed. That's because of the preponderance of individual truck owners in the road transport industry. This was not really working out in favor of the truck operators because they didn't have the business capability and they were always at the mercy of aggregators. Other problems that plagued the industry was while the trucks were bought, there were no further technological upgradations. The routes were suboptimal, the loads were suboptimal. In many cases, the trucks would return either full empty or half empty. Over and above that, there was no way in which business can be booked by the clients directly. However, the startups which are mediated by technology, such as delivery, completely altered the truck transportation sector. Delhivery has been a pioneer and also a leader in the digital mediation of the trucking industry. The milestones which I have mentioned so in the past two slides indicates how Delhivery has completely transformed the transport infrastructure, and this has also come to the benefit of the small truck owners also. One of the things which Delhivery attempted was transformation from hyperlocal to e-commerce logistics. The company grew to become a unicorn in the industry. The way it disrupted the India's logistics industry was through its proprietary network design, infrastructure, partnerships, and engineering and technological capabilities. It was a fulfillment, omni-channel, and data services driven company. The mission was to shrink time and distance, making the world a smaller place for its customers and over a billion consumers the company serves. This has been the mission of the company. So, hyperlocal to e commerce logistics were all covered by delivery. Delivery used to transport not merely through trucks but also through truck trailers and also through two wheelers. All kinds of transportation were pressed into service by delivery to have total dynamism and total flexibility in the way the company transformed the transportation sector. Today, delivery is a giant in the digital transportation sector. 7,500 plus partner centers, 85 plus packing warehouses, 66,000 plus employees, 7,000 drivers, and over 5,000 trucks. 24 automated sort centers, 75 plus hubs in total across the country. Unparalleled cost efficiency and pan India reach to the business of over 21,342 active customers. 20% e-commerce parcel market share, 48.49% revenue CAGR. 80 plus technology applications. This is the prime mover for delivery as digital transportation company. 6,000 plus network partners, 140,000 plus truckload trips completed, and a capacity that is installed of processing more than 15 lakh parcels per day in over 17,500 pin codes in India across 2,300 towns and cities. It is remarkable that over a decade of existence, the company could achieve this level of spread and depth in the Indian road transport industry. Another important feature of delivery has been the fund infusion that has happened. Foreign investors, particularly the private equity investors, were quick to understand and grasp the importance of digitization of the often ignored transportation sector. So, a number of companies invested in the company starting from April 2012 to September 24, 2021. And many of the companies are also very well known companies: Nexus Venture, Multiples, Tiger Global, Carlyle Group, Fosun, SoftBank, Canada Pension Plan Investment Board, Fidelity Investments, FedEx Express, Leaf Excels Edition LLC are all reputed names with interests in transportation as well as other segments of industrialization. Delivery thus raised a total of $1.39 billion in funding over 14 rounds with a valuation of $3 billion by the time it went to the IPO. The services that Delivery offered comprised express parcel, part truckload, and truckload. It catered to last mile delivery. It also offered third party warehousing with reverse logistics. Vendor to warehouse and vendor to customer service were also offered. Payment collection and shipping is done by the company itself and with cross border services. So, the shippers, marketplaces, D2C brands, large corporates, small and medium enterprises, banking, financial services, and insurance, retail, global businesses were all in the customer list. There were several apps the company developed as part of its offerings for the transportation industry, and the customers were within the borders and cross border. The deliveries were global with Indian customers as well as global customers well connected. There were lots of financial services that were offered by delivery in the transportation sector, and there were also several logistics, technology, and data products services that were offered by the company. In this, the proprietary nature of the digital technologies which the company offered served as a big differentiating factor compared to other transportation undertakings. In terms of strategic marketing, Delivery operates one of the fastest express parcel transportation networks in India. It takes products to the world and also brings the world's products to India. It guarantees safe and reliable shipping, offers flexible same day, next day delivery options. It takes care of end to end logistics and supply chain management, empowers the customer with data science capabilities. This is again something to be underlined, empowering the customer with data science and analytics capabilities. It has a 24 by 7 contact center operating to trace the state of the parcels at different points of the transportation value chain. It is also in the forefront of logistics technologies. It has deployed selective acquisitions to fast track growth. As a result, the company became holistic in its services and well capable of performing within border and cross border transportation transactions. When you look at the business models, different countries have different kinds of business models as far as transportation is concerned. There are three typical types that are offered: typical network design, typical nature of asset holdings, and automation. These are the three pillars which could vary from country to country. The US generally adopted a hub and spoke model in the network design. The nature of asset holdings tends to be asset heavy. It is self owned infrastructure and fleet by and large in the United States. FedEx owns its own fleet, and so does UPS. Automation is characterized in terms of high degree of hardware automation. China too follows a hub and spoke model. Lot of self-owned infrastructure, but a mix of self-owned and partner-operated fleet and last mile. There is a high degree of hardware automation. In India, there are two types of operators. One, the traditional 3PL operators, and the other, delivery kind of digital transportation operators. Traditional 3PL operators adopt the familiar hub and spoke model, but in India, they are asset light, mainly partner operated assets, taking advantage of the fact that transportation is a priority sector and there are many single truck owners spread across the country. Traditional 3PL operators deployed the partner operated assets and becoming asset light in the process. Automation levels are very low in the traditional model, and most of the operations were manual. But delivery completely changed the infrastructure as well as the mode of operation. It has a mesh network which is proprietary to delivery. It is at as asset light, not because it is dependent only on the single truck operators, but because it has leased its infrastructure and fleet and bolstered the hardware with selective ownership of strategic technology assets. The company deployed high degree of automation with full control over the transportation value chain. That's how the business models compare across three important countries: US, China, and India. In terms of the competitor analysis, you can see the difference. Blue Dart is a very reputed and long-standing transport operator in India and fairly modern. Blue Dart has a turnover of 3,165 crores at the time of the analysis in fiscal year 2018-19, whereas Delivery was just about 45% of that size. Del- Blue Dart made profits. 87.6 crores was the profit on a turnover of 3,165 crores, whereas Delivery made as much loss as it made a revenue. That is the theory of new startups: invest heavily, capture market, offer services at a discount, and become omnipresent in the marketplace. In FY 1920, Blue Dart remained at 3,166 crores, whereas Delivery rapidly scaled up 2,988.6 crores. The loss of Blue Dart was 38.29 crores, whereas Delivery's loss reduced to minus 269 crores, and the loss was therefore compressed significantly. Whereas Blue Dart, which was profitable before the COVID times, became unprofitable during the COVID times. In FY21, Delivery surpassed Blue Dart with a turnover of 3,700 crores as opposed to 3,280 crores of Blue Dart. The profit and loss figures were not computed, but Blue Dart sprung back to profit with 96.31 crore profit, and it may be surmised that Delivery continued to be in losses. That is the competitor analysis that existed for you over the pre-COVID and COVID years. There are a few competitors. Delivery is not the sole digital transportation company in India. There have been many digital startups and established firms vying for space. Ecot Logistics is one such company. It had a funding of $504 million with a revenue of $620 million and an employee count of 10,000. It has been an in-house supply chain division of Flipkart, and anyone can use Ecot to ship the orders, however. Rivigo is another famous name in the digital transportation sector. Had a funding of $300 million, dollars, a revenue of $144 million, dollars, and employees 3,000. It is a technology based logistics company that has introduced the concept of relay trucking. It hasn't been, however, very profitable. Ecom Express, which was funded to the tune of $504 million, dollars, boasted a revenue of $620 million dollars and an employee count of 10,000, is a famous digital transportation company. It is a leading end to end technology enabled logistics solution provider. It had its focus on speed, safe, and reliability, and it offered nationwide express delivery services to e-commerce industry. FedEx, of course, is a globally known company and name. It had a funding of $3.1 billion, dollars, revenue of $84 billion, dollars, a staggering level of revenue with employees 650,000 across the globe. This is an American multinational conglomerate holding company which focuses on transportation, e-commerce, and business services. BlackBuck is a technology enabled company offering an online marketplace for logistics transactions. Funding of $303 million, dollars, revenue of $363 million, dollars, and employee count of 2,500. Compared to these competitors, delivery has been of a higher scale and higher capability. The competitive strengths of delivery have been rapid growth, extensive scale, and improvement in unit economics. It has a proprietary logistics operating system which serves as the core competence and the USP of the company. Vast data intelligence capabilities, network design and engineering, mesh network, integrated portfolio of logistics services, strong relationships with a diverse customer base. It has an extensive ecosystem of partners enabling an asset light business model and an extended reach. It has a highly qualified, experienced, and entrepreneurial team. You can see how the mesh system operates all over India, in Maharashtra, and in Mumbai. There are gateways, there are also IPC routes. The mission and strategy of delivery have been distinctive. Our mission is to enable customers to operate flexible, reliable, and resilient supply chains at the lowest cost. The rise of companies such as Delivery has also been coterminous with the rise of the importance of supply chain in corporate productivity and operational excellence. So there are two wheels for logistics companies such as Delivery and particularly Delivery is specialized in that. The first wheel is logistics. Provide superior customer experience to drive stickiness, establish high quality infrastructure and extensive reach, use scale to lower cost of fulfillment. This is as per their annual report. The other wheel is technology coupled with data. Build consumer product location intelligence from order data, create differentiated precision and efficiency through data driven operations, build products and insights to enable customers to drive sales profitability. This level of profitability and productivity is achieved through high quality logistics infrastructure and network engineering, a vast network of domestic and global partners, and significant innovations in automation. Significant investments were also made in automation. All these were orchestrated by the company's self developed logistics operating system that drives network synergies within and across the services, and it enhances the value proposition to customers because of the digitization, warehousing, transport infrastructure, and the turnaround times that are managed effortlessly. The corporate strategy of the company has been as follows: expand investments in infrastructure and network on a continuous basis, continue to build scale in existing business lines, deepen the customer relationships, enhance technology, both software and hardware, in terms of capabilities, externalize the logistics operating system, create new adjacent growth vectors, expand into high growth international markets that are similar to India, pursue strategic alliances, and select acquisition and investment opportunities. These are the six pillars of Delivery's corporate strategy. You can see here the delivery warehouse that is typically available in a big hub. Similarly, you can see the Delivery's distinctive tractor trailer fleets. Tractor trailer is a combination of the truck with low wheelbase but has the ability to pull a long, broad tractor which you can carry heavy loads. So the pillars of delivery's actual transportation excellence have been the following: integrated solutions, including express parcel delivery, heavy goods delivery, PTL freight, TL freight, warehousing, supply chain solutions, cross border express and freight services, and supply chain software, e commerce return services, payment collection and processing, installation and assembly services, and fraud detection. It had a proprietary logistics operating system with in house logistics technologies stack that has been built by Delivery's IT people. Data intelligence was extensively deployed. Machine learning extensively used to build intelligent geolocation, network design, route optimization, load aggregation, ETA prediction, product differentiation, and fraud detection. There have been 20 fully and semi automated sortation centers and 86 gateways with automated material handling systems at gateways powering the automation level in the company. There has also been a unified infrastructure and network. The company operates a pan India network and provides services in most pin codes across the country. The strength, resilience, and also the productivity of any transportation network lies in it being a pan India network so that the loads can be optimized. Return loads can also be optimized, and part truck loads can be consolidated into truckloads based on the national logistics. The company adopted an asset-light operations with systems function as managed marketplaces that match partner capacity with delivery internal and third-party client demand, and that is based on partner service quality ratings and pricing. Above all, being a startup, it had an entrepreneurial team that drove service excellence and industry first innovations. So, integrated solutions, proprietary logistics operating system, data intelligence, automation, unified infrastructure and network, asset light operations, and entrepreneurial passion drove the success of delivery, making it one of the largest transportation companies in this part of the world within a period of 11 years. The business strategy was competitive because it had its own uniqueness. It departed from traditional models. It didn't deploy a traditional hub and spoke model. In this model of hub and spoke, products are ordered within a city are always routed through the hub before it reaches the spoke, leading to significant delays. And the movement through hub was designed to balance out the part truck loads and create truck loads, and that was not going to be helpful to the clients. Secondly, it adopted a no franchise model. It does not operate on a widely distributed franchise model because that model often leads to difficulties in standardization and control. Instead, it adopted distributed model and e-commerce methods. It provides B2B where every branch can operate as the hub. Each can route packages straight to the customers, avoiding delays and with no hassles. Each branch was used as a hub, which is a significant difference with the traditional models where there are only few hubs and many spoke endpoints. And it also deployed multiple modes of transportation to take packages faster via different flights throughout the day. Whenever a package needs to be delivered, the backend system plots the fastest route automatically, including which flight it should take. And the mesh network has been very unique for delivery. The company has invested in a technology platform called Mesh Network that has allowed differentiation even in its delivery business. These are the elements of the business strategy competitiveness for delivery. And how did it transform itself and how did it transform the transportation industry? First, it had an intelligent system direction that was happening. Mature and intelligent technological decisions contributed heavily to the golden metrics of cost and service quality. Secondly, data from tech enabled operations helped to ensure that all the operations are data driven and technology based. The aggregation and disaggregation is data driven and digitally enabled. There was no human judgment or human intervention. There was also an ecosystem intelligence module that operated in the company. The AI platform, for instance, learns from over 1 billion system actions, 30 million user addresses, 4 billion vehicle GPS trace points, and 2,700 terabytes of computer vision data. This data is gathered via GPS, IoT, cameras, and internet connected devices over a month, leveraging it to build intelligence. And fourthly, adaptive network design. Again, AI ML driven network optimization engines that can accurately predict the performance of different network configurations. This helps maintain the most optimal network design over short cycles of time for delivery. Delivery envisages a logistics field of tomorrow. According to the company, the future will see new age logistics players transforming themselves into collaborative AI powered platforms rather than continuing simply as owners and operators of fleets and facilities. Organizations that embrace these tenets as integral to their functioning will continue to maintain a competitive edge over their peers, consolidating their leadership, technological and operational, in the market. Let us look at some of the delivery FY22 highlights. The financial parameters were as follows: a revenue of 72,414 million rupees from operations, 63% revenue growth year over year, that is 21-22 over 2021, 700 million rupees adjusted EBITDA, and 1% adjusted EBITDA margin. There has been a criticism, of course, that the adjusted EBITDA has been a facade to enable the company have a successful IPO and post IPO behavior in the stock market. Then the scale is simply stupendous. Their total infrastructure of 18.1 million square feet in terms of warehousing and truck logistics, 23,613 active customers, 18,074 pin code reach, 220 plus countries served, and 94,000 plus team size. Operationally, 582 million express parcels were delivered, 1,579,000 tons of PTL freight delivered, and 45,000 plus TL trips completed. This is from the delivery annual report. As I said, Indian logistics market has been very traditional and has also been a single truck owner. You have domestic air transportation, rail transportation, road transportation, cross-border transportation, warehousing, and supply chain services. The industry in which delivery operates, that is the road transportation, can be seen in terms of three types of services: express parcel delivery, that is delivery within a day, part truckload, and truckload. Again, part truckload can be express part truckload and economy part truckload. This market structure excludes freight transport through ship, inland water transport, and pipelines. In this, the delivery ecosystem was one of organic growth as well as partnerships. FedEx and Aramex help in international customs clearance, pickup, and delivery services to 220 plus countries. Falcon Autotech helps in robotics, parcel and freight sortation, material conveyance, and warehouse management solutions for the future. Transition Robotics Inc. helps in proprietary technology for unmanned aerial vehicles. Primaseller helps in channel, order, and inventory management services for direct to consumer and SME customers for e commerce and omni channel operations. Road Piper helps in fleet and transaction management for fleet owners on Delivery Orion platform. And Spot On is an industry leading position in part truckload freight that has been provided to delivery. You can see that by having an ecosystem that is based on alliances as well as some selective acquisitions, delivery has been able to expand its offerings and also deepen the quality of its offerings. As a result, the express parcel shipment witnessed very sharp growth from almost zero in FY12 to 582 million express parcels that were shipped in FY22. The part truckload tonnage catapulted from 11 in FY17 to 1,579,000 tons in FY22. The Indian direct logistics market size is estimated at $216 billion in FY20, that is fiscal year 2019-20. It represents a reasonable growth over the FY19 figure of $196 billion. However, a 9% continued growth in the forecast period of FY20 to FY26 will ensure that the Indian direct logistics market would grow to an imposing $365 billion by FY26. Within that, the market size of organized logistics players is expected to increase substantially from 6 to 7 billion dollars to 38 to 40 billion dollars by FY26. Whereas the overall direct logistics market would only grow at 9%, the organized logistics would grow at a rapid 34 to 36%. And that is the opportunity available to companies such as Delivery to shape this market and for other follow on players to enter this market. These are based on the Government of India data covering various modes of transportation. Technology is the backbone for Delivery's success. In 2022, Delivery launched Unified Client Portal, which enables SME clients to self-onboard, access all services through a single application, and customize pricing and operational parameters by themselves. So the apps covered operational, business, data intelligence areas. The marketplace was in terms of app registration, app lifecycle management, app discovery, app exchange, and billing and invoicing. The OS1 platform included libraries, APIs, and SDKs covering the participants, workflow management, foundation including security and compliance, all data management systems monitoring, data isolation, data security, authorization, and access management, and several Logitech developers, third party development partners can build their customer apps on OS1 platform. And that is the foundation of Delivery's expansive thrust in the transportation sector. There is a case study here of integrated distribution for a consumer electronics brand that was offered by Delivery. You have to work with the customers to be able to transform them from a traditional trucking model to the digitized trucking model that Delivery proposed. The problem was that the customer requires distributed fulfillment for faster deliveries and also requires B2C and freight delivery across demand channels. In addition, the customer also requires cross border freight movements for imports. The solution configured by Delivery includes fulfillment centers in 4 cities with a total area of 300,000 square feet with additional on demand capacity for seasonal volumes. The goods flow into fulfillment centers from the factory and from ports through TL and PTL services, that is full truckload and part truckload services, while outbound shipments to e-commerce marketplaces, dealers, distributors, brand stores and direct customers are executed via PTL and express parcel services. The impact of this solution was that the company created value for the customer by enabling consolidation of inventory across B2B and B2C channels, reducing overall inventory holding costs. Warehouses successfully processed and shipped over 5 times volumes compared to normal daily dispatch during the peak season. The company used 5 types of services: warehousing, truckload, part truckload, express parcel, and cross border to be able to provide an integrated distribution model for the electronics brand. What did this integrated distribution solution comprise? First of all, it acted as a primary service provider. The company acted as a primary service provider to the consumer electronics company. On one side, we have factory and port, and on the other side, you have e-commerce channels, dealers, distributors, brand stores, and B2C customers. The bridge for these two polarities has been the distributed warehouse with 4 locations and 300,000 square feet with seasonal flexibility. So the requirements for the solution were in terms of the following: design of optimal TAT from order to delivery, up to 5x expansion in dispatch during peak, NDT service, B2C and B2B fulfillment from common inventory, and appointment based delivery services. The trade efficiency was also taken high note of by delivery management. Delivery has introduced 175 tractor trailers into their fleet operations in FY 2022. These trucks are significantly more fuel efficient in terms of ton kilometer per liter compared to traditional trucks form factors that are the norm in the industry. There are 2 types of trucks: one, rigid trucks, that means the loading space, and the cab or one integral form. Whereas in tractor trailer, the engine and the cab, that is the prime mover, will be short and will be a separate entity, whereas the trailer would be one which is not having any prime movement of its own but gets moved when it is docked to the truck with the prime mover. So this truck trailer combination has the ability to carry much higher loads and also provide flexibility in terms of leaving the trailer to be unloaded and take on an empty trailer and do something else. So the movement and the flexibility are very high in a truck trailer combination. And when the company operates on an all India basis and consolidate huge amounts of tonnage, these tractor trailers serve as very efficient modes of road transportation for the company. The fuel saved per ton as compared to other truck types is as follows. If you compare with a 32 MXL truck, the efficiency improvement of 43 to 46 feet truck in terms of liters per ton saved is 17%. If you compare with 32 SXL, it is 44% efficiency improvement, and with 24XL, it is 39% efficiency improvement. The company also continues to introduce flex fuel options like CNG. The company currently operates over 1,200 CNG and electric vehicles and continues to engage with EV OEMs to increase penetration in its karting and last mile operations. Electric vehicles, as currently designed and offered, are very helpful in the last mile operations rather than through full length national operations. A day will come when there will be full length national carriers too. The financial performance of the company over the last 2 years on standalone basis as well as on a consolidated basis is provided here. In terms of the consolidated basis, the revenue saw a big spurt in March 31, 2022, ending fiscal year FY 2022. The revenue was 68,822.86 million rupees, and the total income was 70,384 million rupees, and the loss was of the order of 10,261 million rupees, which is high. And when you compare with other companies which are in the traditional mold, certainly they do not have the same level of losses, and the losses are because of the heavy investment in infrastructure and digitization. What the traditional companies did for several decades with judicious business models, and what they could not do in terms of heavy deployment of digitization, has been attempted and accomplished by Delhivery within a period of just a decade. And this has led to severe capital intensity of its operations and therefore significant loss making capacity of the operation as opposed to a required profit making performance of the transporter. So let's look at the delivery peer comparison. Blue Dart Express, Mahindra Logistics, TCI are compared with delivery. In terms of the revenue parameters, they are more or less in the same range with 3,000 to 4,400 crore revenue levels compared to deliveries 4,180 crores. Operating expenses are also more or less in alignment. However, in terms of the profit before tax, the traditional transporters have got profitability levels which are positive, whereas delivery has a huge negative profit before tax. And the EPS is negative, so is the operating profit margin as well as return on equity. The business of traditional transportation has shown continued positive profit movement over the period of comparison. But if delivery continues on its growth path and gets full returns out of its capital investments as well as digitization, potentially it can at least break even sooner than later. Delivery has also been enabling the growth of direct to consumer brands. As we have seen elsewhere, direct to consumer is an extremely important aspect of cost minimization in distribution and making customers feel happier with lower levels of pricing. So, there are some aspects of D2C brand management. Firstly, you have to have inventory optimization. Delivery's warehouse management system allows D2C brands to manage multi location, multi channel warehousing. Brands can optimally place the right amount of inventory at the right location based on seasonal fluctuations in order that volumes and demand pattern are better managed. Then cost optimization comes. Delivery warehouses are located strategically across 35 plus cities. Technologies such as smart route optimization, geocoding for last mile deliveries, and real time fleet tracking help D2C brands to reduce cost. Then we have data driven capabilities. The company has developed its own AI platform after analyzing more than 1.7 billion order data points from their successful deliveries. And finally, you have NDR management and reverse logistics. It enables brands to identify potential RTOs or undelivered items. Delivery sends the non delivery report to the consignee over WhatsApp for verification without manual intervention. This automated real time consignee verification, and this helps brands improve reattempt deliveries by 10%. And in direct to consumer marketing, ability to catch the customers when they are at the office or at the homes is vital, and not missing a consignment delivery is of utmost importance. Therefore, the automated real time consignee verification is a technology that has been put in place by delivery to ensure that the parcels reach properly and there are no costs that are embedded because of the return of undelivered parcels. Delivery has set up an innovation lab understanding the importance of technology in development of the transportation capabilities. It partnered in 2021 with a Mumbai-based startup Resu and launched the Delivery Innovation Lab. The objective is to enable technology partnerships, strategic engagements, and proof of concept development on predefined use cases with emerging technology startups. As a result of this initiative, Delivery is aiming to discover technological solutions for logistics and supply chain industry. More recently, it has also moved into the bandwagon of ONDC. As we are aware, ONDC stands for Open Network for Digital Commerce, which is an innovation brought in by the Government of India to connect small businesses across the country. This entry into the ONDC network has been futuristic and collaborative on the part of Delivery. ONDC is a UPI of e-commerce. It seeks to democratize digital or electronic commerce, moving it from a platform-centric model, that is Amazon or Flipkart kind of platform-centric model, to an open network which can be accessed by anyone wanting to do digital commerce. On December 15, 2022, Delivery went live on ONDC and has successfully integrated itself with the sellers. The company is ready to begin intercity express parcel movement through ONDC. With this move, Delivery will be able to access customers in the remote corners of India as the sellers can leverage Delivery's extensive network of more than 18,000 pin codes in the country. And as companies try to have their own digital platforms, their own DTC models, Delivery's participation in ONDC will be of great help for such companies to extend themselves into the far interiors of the country. So, when you look at delivery over the last several years, which is actually not too long, just a short decade, you will find that investment in hardware, that is warehousing, investment in mobile hardware, that is trucks and tractor trailers, and investment in digital technologies, most of it proprietary, along with a flexible mesh based business model or transportation routing network model, have helped Delivery to become a pioneering and leading and dominant digital transportation player in India. So, what is the lesson of business development that we can take from Delivery? First, be an early starter in digitally disrupting the transportation industry. Bring in modern fleet and fleet management systems. Create a vast warehousing infrastructure because for any transportation activity, warehousing, that too modern, contemporary, digitally mediated warehousing is essential. So, create a vast warehousing infrastructure. Raise ample funds to establish itself in the investment intensive industry. Leverage data and digital for the most efficient transportation. Create a vast all India network of trucks and drivers. You could have observed that the drivers are 7,500 and the trucks were 5,500. It enabled rotation of drivers over 24 hours 7 operation and providing adequate rest periods to the drivers. Create a value proposition based on the earliest delivery benchmark. Creative, therefore, a distinctive brand image in the transportation sector of the digital efficiency and effectiveness. Professionalize the management and management process. Pioneer the IPO route at the appropriate time in digital transport startup community. Move towards globalization with cross-border alliances with reputed players. In this case, it has been with FedEx as well as UPS. Become a role model in the mobility space. This has been the logic of business development by delivery over the last few years, and it has really shown how a sector, that is road transport sector, which is considered not being amenable for modernization, has been in one go transformed into a digitally savvy, efficient and customer oriented transportation network. So with this we come to the end of this lecture. I thank you for your attention and hope to look up again in the next lecture.